Hey guys, hope you guys are doing well. This is the very first video of the course update. In this video, I will teach you about different variations of auto blocks and how we can use them. In my last couple of videos on YouTube, you might have noticed that I've been using auto blocks in a different way. I'm not using it because they work better than the method that I've taught before. I'm just using it because it's quite simple and it's good for my psychology. So as you know, this is the old method. Excuse me. So this is the old method, right? You have lower low, lower high, lower low, then you have a market structure shift, right? And you have fair value gap here, as I have denoted here, as you can see, fair value gap. So most of the time we use the first candle of the fair value gap as our auto block, right? You guys must know that because I have taught this before in my course videos and as well on YouTube. Now this right here is you have lower low, lower high, lower low, and then market structure shift. And now these consecutive bearish candles are your auto block or is your auto block, right? So over here you can see we have used the first candle of the fair value gap as our auto block. Over here you can see we have lower low, lower high, lower low. So this consecutive candles in this last lower low before market structure shift is your auto block. Now nowadays for auto flow strategy, I'm using this as my auto block, and for other strategies I use this. Now what are the pros and cons of both of these methods, right? This right here is a refined auto block, okay? And this is not a refined auto block. You are going to miss entries when you are going to trade this auto block, okay? So let's say price comes back into this level. It's not going to happen all the time. However, the chances that price comes back and mitigates this auto block right here and then goes back up is higher than the chances of this auto block, okay? You're going to have a greater risk reward when you take your entry from this level, from this auto block, and you're going to have low risk reward if you take your entry from this. So I take my entry from this. Another thing, when you have this type of auto block, fair value gap is not necessary in this leg, okay? All you need is these consecutive candles, or it could just be a single candle, okay? It could just be a single candle like that, okay? It doesn't have to be one or two, but if they're like, let's say, as I said before, if they're like two candles like that, yeah, then that could be, you can take your entry from here. Or if you want to refine it, of course you can take it from here, but it is gonna decrease, it's gonna like decrease the chances of you getting triggered in the trade, okay? So now here's the high probability setup for this setup right here. When you have like a breaker block in alignment with this auto block, that is a high probability trade setup. And what is a breaker block? You have lower low, lower high, lower low. The candle over here, the first candle of this lower low, it's going to be here. If it is in alignment, the size is the same, right? Then that to me is a high probability setup. And then what's going to happen? Price is going to tap into this auto block and you're going to have a push like that. The reason why I go 1 to 2 with this type of setup is because you don't want to trust the price to keep going higher, okay? I just take my 1 to 2 and then I'm out the markets. This right here is a refined entry. So when you get an entry from here, that is like, it's going to give you more risk to reward. It's really that simple. Yeah. So, yeah, that's about it, guys. So you can use both of these auto blocks. You don't have to be confused about which one to use. It really comes down to your style of trading. I am mostly trading this auto block nowadays, and this is what ICT teaches. This consecutive bearish candles or a last bearish candle before the move to the upside that breaks the structure. But it's really up to you. This one works as well, and this is what I've been trading like most of my life, and it works absolutely well. Only downside, you're gonna miss trades. So it's really up to you now if you want to trade this one or this one. This one has its one pro, you don't need to see a fair value gap, okay? You can simply trade off this level, okay? So what I'm gonna do is I'm gonna give you a couple of examples of this thing right here. You guys already know this, right? So I'm gonna give you an example of this one, this auto block example.